It's Tahoe went skiing Sugar Bowl for the past couple days. Been fun.
It's awesome, man. You definitely should have hit me up.
Do you ski or board at all?
Snowboard when I get the chance.
Hell yeah, that's awesome. Yeah, that's you because you have Tahoe so close. Being from LA, I gotta drive like 7 hours to go anywhere good. Like Big Bear there's no snow right now, so it just sucks.
It's early in the season still. It's early in the season still.
Yeah, it's true. It's true.
Well, anyways, you better be at the meetup this year, man. We're gonna send out the announcement for it here in a couple weeks. Well, it's gonna be in June, but we're gonna send the announcement and bookings and all that.
Where are you guys doing it?
Tahoe.
Okay, that's significantly more doable for me, and I would fucking love to.
Yeah, man, you better be there this year. Yeah. Last few years have been a good success, so hope you can be there this year.
Yeah, I hope so too. I gotta run in a minute, but I would love if you could check out IBM for me.
Yeah, you wanna know what's funny, man? I run this poll, right? Everyone says they want Mondays at 5 p.m. Here we are.
I'm the only one here.
Here we are, Monday, 5 p.m. Changed my whole schedule around for it, and one person showed up.
Wow. Yeah.
I'm gonna be honest, man. I think I'm gonna stop doing these.
I mean, at this point, yeah, because if it's honestly more worth it for you to just answer DMs and just if someone has any specific questions, just be like, yeah, let's hop on a little 20-minute thing and then do that rather than set up a whole 1 hour.
Dude, or if I just don't do it, you want to know what's crazy? And this is the fucked up part about it. I could make money off these sessions. If I don't do it for 6 months and we get a bunch of new members, I'll just advertise the hell out of it and be like, hey, $15 placements,
Yeah.
And then
I know people who used to do that. They're like, yeah, I'm holding one charting information session, $10 to enter.
Yeah. That's what I'm saying.
Give me sell me $10 and I'll send you the Zoom link.
Exactly. So that's the shitty part about it, dude. I try to make it all inclusive within the membership, and people take it for granted.
Yeah. But it's just ridiculous.
Right. Anyways, IBM.
But yeah.
What are you holding?
I'm in shorts as of mid today. I'm in shorts on actually both UPST and IBM, but I'd like to take a look at IBM. I think it's a slightly cleaner chart. It kind of didn't commit to lower as much as I would have hoped today. It kind of wicked it pretty hard. I'm just personally my market bias right now is still it's so iffy, especially with this whole coming into the end of the year and everyone wants to run their taxes and do whatever they want to do, either fill out their gains or kind of relieve some capital before the end of the year, to write that off and whatnot. So it's kind of, playing that iffy game of, okay, I'm sizing down, having very little, position sizing, but also looking for some, market opportunity. And I do believe that we are kind of seeing a bit of a short-term, volatility spike. And so looking for a couple short opportunities. And both IBM does look good for that. It's kind of been weaker. It kind of consolidated and then we broke even lower today. So back on that retest, kind of coming back up, hitting that level, just played the RR game and, going to let it play out.
So, why IBM?
Just because, so IBM in specific, because on IBM in specific, because we sold off and then we kind of danced around this.
No, not technical. Not technical.
Oh, just why IBM in general?
Because you came at it from a fundamental perspective, and your justification was the general market with volatility and everything. IBM's a pretty low vol name,
right?
And it's tech. Right. So do you have something against tech? Do you want to play a lower volume name because of safety?
Right. I actually so I guess maybe I'm wrong on this, and this would be what actually great if so I had the thought process of, okay, I'm looking for short-term volatility, and then I went to my kind of general screener and I was looking for kind of stuff that has been strong over the past 6 months or so, because it's just a general screener that I use to kind of look for all the stocks that I trade. This stuff has been strong for the past 6 months. It is volatile enough. It has a high enough ATR. And I was just looking, instead of for breakout setups, I'm looking for breakdown or slightly weaker stuff.
Okay.
And this is one of the ones that kind of popped up on that scanner. And so it wasn't anything specific towards IBM. And maybe now, IBM is kind of one of the ones that's okay. This is definitely a slower one. But I think it just popped up. It's just basically, bottom line, it popped up on my scanner. It looked like a nice short setup, and it played along with the fact that I was looking for short-term volatility.
Okay. All right. Are you already in something?
Yes.
What are you holding?
I am in. Here, let me give you the contracts.
What's going on, Jordan? Real quick, what's going on, Jordan? Welcome to this session. Which contracts are you in?
I'm in weeklies, so I'm in this week. 217.5.
Oh, dude, are these all you? These contracts have no volume, man. And honestly,
there's nothing there.
There's nothing. The open interest is 65. The volume alone is probably less.
Yeah, you know what? That might be me.
No, the volume's about 180, but
I currently have 8.
Okay. Yeah, so
I don't have very many. I'm really I'm gonna be super honest. I've been playing really slim recently, and it's just kind of this is not a time where I really want to be risking a lot. I just have no clear market direction currently, and I think that they're just we're in a time that's a little bit unpredictable.
Sure.
I'd rather kind of wait for a little more trending market in either direction, at least for the time being, to commit to something.
Yeah.
And so I kind of pulled back sizing wise, which I think fits this kind of general. But yeah, that's really funny. That is something I need to take a look at, because especially when Cobain tells me the same thing, I tell him, contact him, and he's like, bro, there's fucking no one here.
Yeah, and also, I mean, I'm sure you can tell by looking at the spreads, but also, my man, look at the open interest on the 220s. Something to kind of keep in mind when you have strike prices that go by 0.5 increments like this, these will always be. It's just something to do with psychology, right? Even though this contract is further out of the money because it's a nice whole number, 215, it has more volume. Even though it's further out of the money. It's just a psych thing. These contracts as 0.5s are always going to have less volume and less open interest. Plus, I always think at the money is safer, especially for a name that moves as slow as IBM. And I want to be honest, even if you get a good move lower, I still think you have to consider Wednesday market's closed, right?
Right.
And it's the last day, it's the last week of the year, start of the new year. So naturally, we're going to see lower volume. This might be an exception because of the recent spike in volatility we've seen, but typically this is a very slow time of the year. But you're pretty deep out of the money. I know you're just one strike away, but realistically, this is a big move for IBM. So if we crater into another $2 lower into 218 tomorrow, yes, you'll make money, but how's the liquidity? Are you going to take a 15 or 20% haircut on your value to try and get out?
Right.
So that's another reason why I question, why IBM, right? If you're looking to short tech, hell, even QCOM is better than this,
Yeah.
I just don't trade IBM a lot for these reasons. It's a slower mover. It's not really the type of action I like, and contracts are just super low volume, right? It's tough to get in and out without taking a haircut on the mid price.
Yeah, totally. Yeah,
I mean, shit, Nvidia was strong today, but
definitely noted.
Yeah.
So would you say generally the end of the year is not high volatility? It's very low, very slow.
Well, you got to think. Think about it just from a technical perspective. What is market doing towards this time of year that so many people look forward to? There's a whole name for it.
Wait, just. I honestly don't know.
Santa rally, right?
Yeah.
People look forward to a Santa rally, and it happens probably 60% of the time. This year we didn't really get that great of a Santa rally, but what happens when the market's pushing higher? What is volatility doing?
Contracting.
Yes, yeah. Volatility is decreasing. VIX is typically at or near lows, right?
Right.
And so naturally, it's going to be a slower move higher, right?
Right.
And the reason that can be explained away for last week's, overly bullish action, right, was because we were in the middle of a rebound while VIX had lots of room lower, falling all the way from what did we hit, 28 or something on VIX, right?
Something like that. Yeah.
Yeah.
Somewhere, yeah.
So this you could explain away as sure this might have been our Christmas rally. It was short lived, but this was also, a rebound during a high volume period. But during this period, VIX was contracting. In any given normal year, that's typically what you would see is during the Santa rally, the end of the year is a really weird time because especially with this year, it's been so positive. Market's up even right now after this pullback. I think market's still up like 24% year to date, right?
Right.
Like it's been a great year. There's not a lot of people tax harvesting, right? Because you tax harvest losses. Okay. So there's not typically a lot of people this year that are locking in losses. Whereas if you look at 2022, the end of the year was a bit more tricky because it was a red year. There were a lot of losses to harvest, right?
Right.
But thinking about where people are positioned, how we're doing, right? Yeah, I bet you ask any one of your family members, and no matter when they bought stocks this year, there's a very good chance that they're green on their investments, right?
Right.
They're not panicking about losses. They're not stressing about having to pay for those taxes next year, whatever. So it's typically a low, right now, aside from that sell-off we saw thanks to Powell, this had everything in the making to be a very, very slow end of year.
Right.
But Powell, of course, came out and shocked everyone with, the slowing of rate cut schedules.
Totally. Yep.
But
Yep.
which
That
was
makes a ton of sense.
which was odd, honestly. I mean, I thought for sure we were gonna have a really, really fucking boring last 2 weeks of the market.
Right. Yeah, me too. I thought we were just going to continue the slow grind higher,
Yeah.
and just keep doing what I was doing. But, yeah.
Hey, market's unpredictable,
Yep, exactly. Keeps me on my toes.
Absolutely. But
Yeah,
anyways,
yeah.
IBM, I mean, it could be solid if the rest of tech is weak, but for right now, I don't see a reason to be overly bearish.
Yeah.
I personally think, listen, in the grand scheme of things, I think we need a correction, right?
Yeah.
But there's not really a reason for it right now, right? So I think this downside and this turbulence is probably gonna be short-lived. So in terms of like monthly contracts or weekly contracts, there's no reason to be aggressively shorting, in my opinion. I think even after this last 2 days of selling, I think we're pretty close to kind of figuring out some sort of
it's just
balance that
recovery and kind of
sure. I think it's
needed volatility after a slow month or so.
Yeah, I mean, what Powell's speech did was create an imbalance, right? And so that's what we're seeing. It's just imbalanced price action, right? There's no price acceptance currently anywhere, and there are levels there are levels on this chart that will give you good risk to reward. Just at this current day, right now, there's nothing within range, right?
Right.
But with that being said, obviously, if you want to go really technical, I mean, hey, this last week we made a lower high. Volatility is making another reversal. For the next few days, it's makes sense to still be looking for lower. But that should be limited to day trades. I think short term, we're still going to end up finding a bottom here pretty quick. But with everything that we saw today, right, the week close, the current trend with technicals and of course volatility seeing another rise, it leads to the next, the rest of the week being not so great. But and that fits your case,
right?
I don't think so. I think it's a full day. Let me check.
Oh no! It said bond markets are a half day. Stock is a full day tomorrow.
Yeah, I was gonna say I think tomorrow. I'm pretty sure tomorrow's a full day. And also, Jimmy Carter's day of mourning is next Thursday on the 9th. So markets closed.
Got it.
Markets closed to next Thursday. So something to keep in mind. If anyone is holding any swing positions, just know that as of today after close, when it was announced, you now have one less day of time value. All right. So that was fun. See, we got a few more heads in here. SoCal Sean, Jordan, Anon. Good to see you guys. Shout out to you for showing up. Does anyone have anything they want to check out or just any general questions?
Yeah, how do you find small caps?
How do I find small caps? I mean, personally, I don't trade them a ton. What are you looking to do? Like, do you mean like with a scanner? Do you mean with like
Just to get some equity?
for equities? So that's something that you're gonna have to do research on, right? Like, I know you saw Squiggles post today, right? That small cap that he found. I hope you know behind the scenes he's doing a lot of DD, right?
Yeah.
He's finding sectors that he's interested in, whether it be quantum computing or electric vehicles or something like that. He's finding a sector that he's interested in to start, and then he, finds a few comparables. And so one way you might go about that is, let's say you want to look at quantum computing, right? You'd maybe gather 10 or 15 stocks that you think are interesting, and then you would rank them on a number of things, right? That being, are they currently profitable? Are they, investing wisely, right? Are they losing money because they're spending money on building warehouses or expanding infrastructure? And then after that, you likely want to take a look at the general market, which is okay, small caps, you have to realize they're 90% of the time losing money, right?
Yeah.
So, what is important for a small cap that's losing money? Decreasing rates, right? When we're currently in a rate cut environment, so small caps should be poised to perform well over the next couple of years because they are the ones who are the most beneficiary to that sense, right? If it costs you, if you want to build a new warehouse, would you rather finance it at 9% or 4%? Right? Obviously 4%. So small caps are very, cyclical in that sense, right? It definitely matters about the interest rate environment. So that's positive, right? You don't have to really do much work there. That's something that is long lasting. But second or third is management, right? You want to look at the management team, and because you're looking at a bunch of unprofitable companies. On paper, they're all worthless, right? If a company loses money, it has no intrinsic value, right?
Yeah.
There are some ways you could value a company that are not profitable, but the best way, in my opinion, and how Warren Buffett's always done it, is to look at management. Are they what's the word I'm looking for? Are they are they decent people? Have they worked on successful projects before? Have they been in that space their entire life? Right? Like stuff like that. You probably don't want something that's got, some 19-year-old founder who it just has nothing but a bunch of angel investors, right? You probably want some company that some guy has spent 30 years building and has, done a bunch of seed round funding and is, you know, dedicated to that space, right? So looking at management is very important. And then of course you want to see how they're spending their money. Is it going towards investment, or are they just burning money at both ends because they pay too much for their shipping or whatever it happens to be, right? So first find a sector that you're interested in, and then do some research on 10 to 15 stocks and then rank them, right? And then maybe put a small chunk of change in the top 3 or whatever, right? Based on your analysis. And so that's what Squiggle's doing. Again, I over summarized here. There's a decent bit of back end work that Squiggle's doing, but that'd be a great question for him to ask. What do you look for in companies to, like this one he posted today, OPTT. It'd be a great question to ask him, hey, what made you, what was the fundamentals behind Ocean Power Technologies that made you want to invest? Right?
Yeah.
And that'd be a good way to kind of ring his brain a little bit about it. And honestly, you should do it in the stock talk so everyone can benefit from it. But that's how I would go about it. Just to over summarize here, find a sector you're interested in, rank them based on those things we talked about, and then score them and invest in the top few that you like. Right?
Yeah.
But again, you have to think of it from an investment perspective, right? You can't really think of it as a trade.
Yeah, because he's just a long term.
Yeah, I mean, if you ask, I saw him type in today. He's been holding this thing for a year, and it's just now finding juice today. Right? If we want to look at this thing,
Exactly. Yeah.
he said he's been holding this thing for a year, right? And you look, you know, yeah, he's been holding this thing for a while, and it's just now getting some real juice. So, but hey, if you had bought this thing a couple months ago at 15 cents, you're up. You're up pretty nicely. And shit, if we look at an hourly, wow. 28 cents to $1.10. Yeah, that's a pretty solid return.
That's nuts.
It is. Give me 2 seconds really quick, guys.
Anyone else have any questions? Jordan, so tell Sean.
All right, I'm back.
You don't want to go break?
Oh. All right, what's going on, guys? Jordan, SoCal, either of you guys got anything you want to ask about? If you guys don't want to unmute your mics or you don't have mics, you can always just tag me in the chat somewhere. Always typing. Could this be the first SoCal Sean message? SoCal Sean, I always have to disconnect him from the voice chat at the end of the day. He's always in there alone by himself. He forgets to leave the voice chat. Don't have a mic. Okay. Well, do you have anything you want to ask about, or any charts you're looking at, or just any general questions? That's what these sessions are for. If just make sure to take advantage. I know you're a premium member and you're paying for it, so get everything out of it that you can, man. Again, no, there are no questions that are too simple or too complex. Okay. Of course, my knowledge is limited, but I can give you the best answer I can. All good for now. We'll get a mic from my son. Sure. Also, SoCal, did you know that you can use Discord on your phone? I mean, I'm talking to you guys right now from my phone. You can just use the mic on your phone if you download the Discord app. All right, Jordan, you got anything for us? Anything you're interested in looking at? Nothing? Okay. Anon, you got anything else, man?
I mean, I don't know if you've gone over it already, but what's your general sentiment of what's going on?
Yeah, we kind of talked about this a little bit when
was it you mentioning a correction? Well, that's a big scheme of things, like correction, but for now we're just
I think yeah, I mean, if you look at the last 2 years, right? Here's the beginning of 2023, right? Since then, it's been we saw really one decent correction, right? And I would argue that this wasn't really a correction because this whole thing was news based, right?
Yeah.
This was the only real correction we saw. And at this point, we hadn't even really committed to a reversal effort. But if you look at the beginning of 2023, right, here's January 4th or 3rd, which was the first day. We have literally gone nothing but up since then, right? It's been a very consistent bullish market. And looking at the business cycle, if you're familiar, typically when the Fed begins to cut. Damn it. Oh, what's up, Daniel? When you focus on the business cycle, it typically revolves around the Fed's actions, right? And so if you look historically, all of the major corrections we've seen in the market have come around major Fed events, right? So let me clean this up a little bit, right? And let's put the max available here. So here you've got 2000, okay? So all of these major events also coincide with market catalysts, okay? So some of these, it won't make a whole lot of sense at the time, right? But the Fed begins cutting rates, and then we get some sort of catalyst, and it varies. So in 2000, I'm sure most of you are aware, was the dot-com bubble, and which is, this one's interesting because it's very similar to what we're seeing today, right? So the number that I read today, right, back in 2000, you had MicroStrategy, which is popular again today, but for different reasons. You had WorldCom, you had Cisco, right? You had a bunch of these tech companies that accounted for like 20% of the entire stock market's value, right? And it was clearly a bubble, and so it of course corrected with god awful figures, right? If we look at Cisco still has not fully recovered from the dot-com bubble, right? So here's 2000 and the collapse, right? They lost about 75%, 75 to 80% of their value in a few short months. And they still have not fully recovered it 25 years later, right? But anyways, focusing back on ES, the Fed cut rates after this, right? And it lined up with the dot-com bubble, and that lasted about 2 years of downside. Next, you have 2008, which of course you guys know is the global financial crisis, caused by malpractice in the mortgage industry. And, we saw mass defaults across a whole lot of people who were just unfamiliar with,
What they were getting in.
yeah, they weren't familiar with the mortgages that they were signing. And to make a profit, a lot of banks were okay with that. And so something like that is unlikely to happen again because this, of course, created a whole lot of regulation around that space, right? But regardless, market crashed, and the Fed, of course, to stimulate the economy, cut rates, right? And then, most recently, COVID, right? So COVID, the world came to a grinding halt. A whole lot of businesses had to shut down due to COVID, right? So every business, every small business, and a lot of major businesses had to pretty much cease business for a month or so, and that obviously was pretty detrimental, right? People were going without work, all that fun stuff. And so how did the Fed react to that to stimulate the economy? They cut rates, right? And now we're seeing something very interesting and honestly very comparable to 2000, right? We've got 5 stocks that now make up over 25% of the entire market's cap, right? Of the entire market cap of the entire US stock market, 5 stocks make up over 25% of it. So the constant Nvidia, Apple, Microsoft, Amazon, and Meta.
Oh, okay.
Shit, throw Google in there too. They're pretty big, but they're not. I wouldn't say that Google's overvalued. But anyways, you've got 5 or 6 stocks that make up over 25% of the value of the entire market. Okay, so that concentration risk, which is primarily tech, is far greater than it was in 2000. Okay, so that's one risk factor. But when the market inevitably does correct, again, I'm not calling for a crash. A crash is, 20% or more in a short period of time. I'm not calling for a crash, but I do believe a correction is necessary. Okay. And it could be for a number of reasons. There are a lot of things that are not so, the market, I was saying this in 2020, in 2022 before we started correcting after the relief rally from COVID. And it took a while. I was wrong for a little bit, but it ended up working, right?
Yeah.
And now we've got a number of things that are wrong. So for example, the biggest one, in my opinion, is our debt, right? We are now paying over $1 trillion a year paying down our interest. We don't have to pay the principal back on our national debt, but we have to pay the interest. Okay? So where do you think that money comes from? That $1 trillion a year?
Taxpayers?
No. Hell no. We have to print it. The Fed prints it, right? And that's $1 trillion going into the money supply every single year. So naturally, even if we cranked rates up to 10%, even if the federal funds rate was 10%, which would cause a recession in its own, but even with rates super high, the simple fact that we are printing that many dollars every year and putting them into the money supply is making the fight against inflation that much harder. So that's why this is the sole reason why so many people believe 3% is the new normal, that we're not going to get back to 2% that the Fed has been, claiming for the last 3 years, right? That's very unlikely. The second big one could be the massive number of vacancies in commercial real estate, right? Do you know how many major banks hold commercial real estate on their balance sheets? So they buy, let's say you buy a building for $50 million. You buy a building for $50 million and you're paying interest on it, right? To buy that building, you have to pay the principal plus interest. And how do you make your money back from owning that building? Same way a landlord does. Hello? Can you guys?
Oh, you cut off, bro.
Sorry, I got a phone call.
Oh.
Same way. It's the same way shit. I lost my train of thought. It's the same way.
A landowner.
Yes, it's the same way a landlord does, right? They buy a house, they rent it for higher than their mortgage, right? And that's how they make a profit. So how does a bank or some sort of developer make a profit on a building? Rent, right? Office space. People have to rent out those spaces, and that's what pays for the building, and then in turn creates a profit at the end. But vacancies are extremely high, right? And so because of this whole, since 2020, there's been this massive craze of work from home. And a lot of companies realized they don't have to spend money on rent when all their employees can get the same amount of work done working from home at their computer, right? And so what happened is you've seen a plummet in rent spaces, which in turn has not only dropped the value of these commercial properties, right? That $50 million property is now worth 25 or 30 million, right? So they're taking a loss on the value of the property and they're not even making it back in rent, right? So we're seeing, eventually, what do you think these banks are going to have to do with all these commercial real estate properties on their books?
Repo or something like that.
They're either going to have to sell them and accept a loss, right? And where do you think banks get money to make these purchases?
From the government?
From your deposits, right?
Oh.
So in turn, if all these banks start reporting massive losses, you could see, a lot of fear in the banking space and people fearful that, if a bank incurs too much losses and they become insolvent, they have to shut down. And so if there is even an inkling of fear that a bank is going to shut down from losses, what happens? Let's say you're an average American, you're 65 years old, you've saved up your entire life, you just cashed out your 401k, and you've got $2 million sitting in the bank, and the bank closes.
That's gone.
Most of it. You're only insured, FDIC only insures up to 250K. So your retirement is now gone. And guess what the rest of your money goes to, right? That the rest of the money, if there's any left that the bank has, goes towards paying debtors, which are the people who gave them the loan on that commercial real estate, right? So that's the risk that we're seeing. So if you look at us, again, the big banks, JPM, Wells Fargo, they are very well diversified, right? But a lot of these regional banks, it might be, East Main Street, fucking whatever your bank is, right? If it goes under, it can ruin people's retirement plans, take all this capital out of the world, and pretty much poof, right? So there's a commercial real estate crisis looming, which is supposedly being handled because the Fed has bailed them out last time. But there's a number of things that could be, the next one, the mass retirement, right? Right now, all the baby boomers are retiring, right? So you've got a lot of the skilled labor leaving the workplace and retiring, right? Between the ages of like 60 and 70, all of those people are retiring right now, right? And again, that's probably the least of our worries. Labor is, in high demand. And that's
Is there on the ES part? You know, when the banks were closing, when some banks were shutting down, is there like a pivot there on ES?
absolutely, yeah. Let's back check the date with when Silicon Valley Bank collapsed. The date was March 10th, 2023.
Right there, yeah.
No, it was back here.
Yeah. So it wasn't really bombing right yet, but
yeah, it was a little bit of turbulence. Let's go down to something like a weekly. All right, so here's our daily. March 2023. It was this sell off. It wasn't really that much because again, the Fed bailed them out, right? And in Silicon Valley actually got acquired by, I believe, JP Morgan. So it wasn't a long lasting crisis. And Silicon Valley wasn't a retail bank. They were a business bank. They handled, startups, right? So startups, of course, are not a major, proponent of our economy, right? They do host a lot of people's employment, but the people who lost their money in Silicon Valley, first of all, didn't lose their money. The Fed bailed them out and gave them liquidity. But if anyone had lost their money, it wouldn't have been the employees or people storing their savings in the bank. It would have been businesses that lost their money. So the founders of those companies and owners of said businesses would have gotten screwed, but the people who worked there as employees likely wouldn't have, unless they had equity, of course.
Yeah.
But yeah, so here's what we're seeing now, right? Now we're seeing an extreme concentration risk, right, of just a handful of stocks occupying more than 25% of the value of the entire stock market. On top of that, the Fed has now begun to cut rates, right? So I personally think we are due for a correction, and it could be something very mild, right? If you look at the 2022 correction, which was a correction, right? We did decline more than 20%, right? If you look at the high we made in 2022, we'll just do a little trend real quick. Here's the high we made in 2022 at about 53.20-ish. To the low was about 25%. So this was a correction. This was a very solid correction, but it wasn't that violent. There were definitely some aggressive periods, but it was mostly a gradual decline, right? It wasn't super violent, but look how long it lasted, right? From the high to the low was from January to October, right? All of 2022 was a red year, right? So this is kind of something that I'm waiting for. Do I think it's going to kick off right now? No, but it could be. Is this something I am certain is going to happen in 2025? Maybe. No, I'm not certain. But my portfolio is prepared for it. I have been reducing cash, or I've been reducing long exposure, and I'm accumulating cash. There are some names that I'll never sell, right? Nvidia, for example, it could get cut in half. I won't care. I'll buy more at that point. But SPY, I'm not going to sell any of my SPY or my VU or anything like that. But there are some names that in a declining market are going to get hit a lot harder than others, right? Those being speculative names. Nvidia is a highly speculative name and sector, right? Tech is of course the most violent of these cycles. Where you're going to find the safest investments still is going to be value stocks, right? Stocks that are consistently trading right at their dividend discount model price, right, or something like that. Whereas a name like Nvidia that is currently trading at let's look at Nvidia's PE ratio real quick. If I were to guess, I think their PE ratio is in the 80s, maybe even 90s. All right, Nvidia PE ratio. They currently have a PE ratio of 55. So now let's take that and let's look at something that would be considered a value stock, such as Coca-Cola. Right? Here you've got a PE ratio a lot lower of about 29, right? I think we could find even some smaller names, some even safer names. Home Depot, 27. Johnson & Johnson is a favorite. They're a very safe, solid name. Johnson & Johnson, 26, right? But then let's look at companies that are highly speculative, like Palantir. Palantir is extremely overvalued, a PE of 186, right? So this is a stock that if the market does enter a bear market, this thing's going to get sliced in half, at least.
Yeah, for sure. Bro, that thing was at $20 like 2 months ago.
Yeah, did you know PLTR was the best performer in the entire market this year?
I did not know that, but I could see.
Out of large caps. There are penny stocks that have done more, but out of large caps and S&P 500 or Nasdaq companies, Palantir was the best performer this year. But yeah, something like this, right, with a PE ratio of 186. Yeah, if the market enters a bear market, this thing will be back under 40 in no time, right?
Yeah.
Again, I'm not telling you to go buy leap shorts, but if you are invested in PLTR and you've got a healthy chunk of shares, now is not a bad time to start reducing some risk and taking some profits. You know, makes me kind of look around. You know, this is a growth name that I like. Mobileye. Oh, they're not even profitable. Okay. Which is arguably worse. But anyways, this is kind of my larger outlook. Again, I'm not at the point where I'm opening shorts yet, right? I'm not at the point where I'm opening shorts yet, but I have been reducing exposure, right?
Yeah.
I mean, you look at a chart that looks, like this, right?
You just think the top is there.
No. I actually don't. I mean, I don't think the top is in. I think we can. I was just explaining to Captain earlier how I think the downside that we're seeing right now in the very short time frame of like a month or two, I think it's going to be short lived. I think we'll kind of brush it off. Powell's going to get brushed off, and people are going to be excited with the inauguration of Trump and whatever. And we'll probably end up still seeing another new high or two before anything serious happens. But I want you guys to correlate the fact that every single time, right? Every single time, I'm going to find it in the chat because I've sent the graphic in there a number of times. From Waxy correction. Let me just search that up.
Yo, Non, what do you think, bro? Top is in, bro?
Honestly, right now, yeah, yeah, pretty much.
All right, guys, full porting right now. 5,000 puts for next month. Let's get it.
Not like that either, but like, shit, it's a week up here, bro.
But anyways, I'm finding the graphic real quick for you guys, but essentially, every single one of these significant bear markets has coincided with the Fed cutting rates. Now, the thing that you have to take with a grain of salt is every single one of them also came with a potentially market breaking event. As mentioned, 2000 was the dot-com bubble, 2008 was the global financial crisis, this was COVID, right? There's been a number of things. This is really the only, overvalued or overstimulated correction that we've seen, right? And this was completely natural. In 2022, again, we had that kind of banking crisis, but it was bailed out by the Fed. So that was at the later end of it anyways. So again, take it with a grain of salt. If nothing breaks, rate cuts are overall still positive, right? Rate cuts are there to stimulate the economy and grow businesses. But every single one of these corrective markets has also coincided with the Fed cutting rates. Okay.
Waxy.
Yeah.
It's good, brother.
How you doing, man?
I'm good. You took that long, bro, today? You took that fucking amazing long setup?
I did, but I didn't catch all of it. I didn't catch nearly all of it. I'll show you where I played from. You're gonna laugh. You're gonna laugh so hard.
Like 10 points.
I entered here. I entered at 25, and I was completely out at like 40, 45. So I caught 20 points.
Bro, that's crazy, bro. I started catching the long at 43, bro.
No, I longed it here, and I was pissed off because we went lower, but I held through because we reclaimed the low day pretty quick. But then this candle, because I entered here, this candle brought me back to break even, and I was just following my rules. So they got me out. But I only made on a 20-point move. I only made like 50%.
It's pretty crazy. I thought you would make more than that.
Right? With same day SPX calls or SPY calls. Here we go. Did I think? No, that's not it. Anyways, nope. Here it is. Found it. All right. Found the image. So check this out. Copy image. Paste. Check stock talk. That's the image I've been referencing. Every single time the market has corrected, it's when the Fed pivots to a dovish stance. Okay? So a lot of these can be explained away by some sort of event. The most recent ones being, of course, the dot-com bubble, global financial crisis, COVID, etc. But, check this out, right? This is something to be mindful of. The Fed has now started cutting rates. What is going to be the thing that breaks, right? Don't mean to fearmonger, but history doesn't always repeat itself, but it often rhymes. Okay. So because of that, I have started accumulating cash, reducing exposure to high risk names, just so that I'm ready. Again, I'm a perma bull. At the end of the day, I want a downside so that I can buy more. So, it comes from a place of love, but also it's necessary. Right? It's hard to look at a chart that looks, it's hard to look at a chart that looks this vertical, right?
Right.
And not, and not be a little skeptical of what we're seeing. Hell, I think we're long overdue for a lost decade, right? And you wanna hear about that? Ask Mo. Mo's on the same boat as me. So let's check out this high we made in 2000. The market never made a higher high until 2013, right? That was 13 years of zero market gains. And that's what you would call a lost decade, right? Now, granted, if you're a value investor, yeah, you could have made buku bucks playing this, right? Like look at the lows from the lows at, let's zoom in here. From the lows made, let's just say you didn't get the perfect entry, you entered at 700, but you waited until you got to highs, right? Your equity still did 125%, right? And again, might have taken 4 years, but 125% on the S&P 500 is killer, okay? But anyways, that's kind of where I'm coming from. Yeah. There we go. All right, we got 10 minutes left. Does anyone have anything they wanna ask about or any general questions? Blanket? How's your night going? Just listening in. He's at the gym. You don't got anything you want to look at, man? Nothing you're in or want questions about? Let me check my notes. All right. In that time while we're waiting, bar, cockba, pokeba, Welcome to the group. Glad you decided to. You got anything you want to check out? You again. You guys are welcome to use the voice chat and ask questions. Gavin?
Hello.
Oh my God.
Okay.
How you been, bro?
All right. What about you?
Doing good. Doing good. Devin, save us. These guys are silent tonight. Got anything you wanna look at? We just did a whole 20-minute lecture on why I think the market's gonna correct this year. But you got anything you're looking at?
Not at the moment. No, I spent the most of the last 6 months saving up again.
Okay. Hey, I like to hear it, man. Hey, I've been meaning to talk to you, so shoot me a DM later, okay?
Okay.
All right. Hope you saved an extra couple thousand for the meetup this year.
I should be able to swing that.
Let's go. But anyways, all right, final call.
PLTR.
We just talked about PLTR. PLTR was the best performer of the S&P 500 this year. But we were talking about how this is one that is extremely overvalued currently, right? Currently boasting a PE ratio of 186. So if the market is to correct this year, this thing's getting cut in half. I think, again, right now the sentiment's extremely positive. People are fumbling over each other to get some of this equity. Right now, ride the momentum. There's no reason to be aggressively shorting with anything short term. But I will say, I'm not against shorting equity, right? If we do see a correction, which in my opinion is inevitable, whether it comes this year or in 2028, the good thing about shorting equity is it's just like shares. There's no expiration, right? So if this thing does come back down even to 50, if we're at 75 right now and we drop down to 50, you've still made a nice, cool, what is that? 35, 37%, right?
Yeah.
Oh, what were the signs that SPY was going to have that run today? That's a great question. And why are you basically asking why we liked longs this morning? Why we, took some calls? Okay. So the reason we played calls this morning, right? So obviously market gapped down pretty aggressively. Okay. So starting off every day, what you want to do is you want to come in and kind of get a broader picture of where we are. Right. And so the big thing to note is last week when we did hit those lows, this whole general area, again, it's a large area, right? All the way from 40 down to about 5,900 is an area where buyers have been present previously, right? And those buyers were present with extremely high volume, right? Look at these 3 days. These are the highest volume days we've had since that August Japan interest rate fiasco, right? So these 3 days are extremely important, right? This is where we bounced on extremely high volume. So coming into the day, this area is going to be important, okay? So with that in mind, we know we're coming into an area that is important, but here's what the fun part is. So coming into the day, we had already liquidated a ton, right? We didn't even open, until we opened at about 55, right? Let's call it 55. From where we basically started, we had dropped 60 some odd points, right? So huge gap down. So right off the bat, when you get a big gap up or down, you have to think about where people are positioned, okay? So anyone who's not positioned is likely looking at it as a discount, right? They're thinking, oh, if I didn't grab longs on Friday, now is a better spot, right? So that's the smaller end of things. But the bigger end of things is people who are short. Think about the big red day we had Friday and how weak we closed, right? A lot of people are probably thinking, this is going to go lower. Let me grab some shorts. Those people were rewarded this morning, right? They likely started taking profits immediately off the open. So think of everything like a ratio, okay? When you get these hard sell-offs, what are people who are short doing? Right? They're taking profits, okay? And anyone who wasn't positioned is thinking of this as a discount or a dip buy. They look at the price action from last week where we made that bottom, right? That big spot where we reversed off of high volume. They look at that as, okay, this is a spot for me to risk longs. So on one hand, you've got shorts liquidating and you've got new people getting into longs. So think about the ratio. Overnight, the ratio was heavily skewed. Everyone who wanted to be long was scared and sitting on the sidelines, right? And a lot of people got into shorts because of how we closed Friday, right? Very weak, hard pivot off of high volume, right? So a lot of people likely swung shorts over the weekend. Then this morning, the people who are short are taking profits, and you've got other people focusing on that key area from last week, trying to buy longs. So the ratio of people who are positioned on either side, or the easier term for it, skew heavily flips to one side. Okay, so coming into this morning, we saw a hard continued liquidation. This you don't want to touch, right? Unless you're a genius and you're thinking, yeah, I'm going to take the risk and just jump in shorts off the open. We're seeing a gap down. I think we're going to go lower. Sure, you've got bigger balls than I do, but that's not a great idea in my opinion. But what happens when we get right about here? You really start to see that bulls are fighting it the whole way down, right? The whole way down, wick, reversal attempt here, further breakdown, wicked, right? Another failed bounce attempt. So right about here, when I see that we finally kind of start to base out a little bit and I'm seeing dips be bought, that's when I'm thinking, all right. One thing to note, and again, Mancini is great about mentioning this. I know a lot of you guys recently have really started to read into what Mancini says, and he's, I think he's a great teacher. He mentions this all the time. Elevator sell-offs lead to short squeezes. And if you think about it, it makes a lot of sense. When we're selling off very aggressively, you have dumbass retail traders and people looking to play the easy trend, right? We're selling off super hard. I'm just going to jump in shorts, right? And they don't think about where they're entering, or they don't think about the risk to reward. They just get in, right? So a lot of people, despite all this, were probably still entering shorts here. Okay, so all we needed to do was reclaim a key level or make some sort of relative higher high to tell these shorts that they're wrong, right? And once they're told they're wrong, what do? They liquidate. They close their shorts, right? So around here, right around here, you've got a lot of people chasing shorts, okay? And they're losing. They're slightly winning, but at the end of the day, you can see through the price action, buyers are. Can you guys hear my dog in the background?
Not really, no.
Okay, good. I got a husky who is tireless right now, and he's just moaning and whining and going crazy. But anyways, buyers are clearly stepping in, but at the same time, you've got still people chasing shorts, right? So I looked at this kind of area here, and this would have been my key to be like, okay, if we break through this failed reversal attempt, this would be an area where I think shorts are going to have to liquidate, right? So we come down, finally buyers are able to catch something, and after this candle, I think it was this candle, once we kind of shot through here and we got this, I don't know, what is that, 22 to 40? So we got this about 20-point candle. And I think this is when most shorts realized, okay, risk is not in my favor anymore. It's time for me to start liquidating, right? And so once this was the nail in the cross. Once we sold off and made a higher low here, right? This is when any last shorts who didn't get out here are forced to get out, right? So this is essentially a squeeze, right? And again, it's easy when you think about it, right? Elevator sell-offs lead to short squeezes for the sole reason of how people are positioned. People are chasing shorts, and as soon as they're proven wrong, they're being forced to liquidate. Does that make sense? Anyone? Does that make sense to anyone? Yeah. Cool.
Well said. Well,
Awesome. Well, that is why we grabbed longs this morning. And again, our entry wasn't perfect. Like I said, I think we entered around like 26 or so, right? We entered on this last little dip here, and it ended up going lower, right? In our contracts, we bought them at 150, and I remember looking, the contracts hit as low as 110, so our entry wasn't perfect. But had we continued selling here and really solidified weakness under this previous low a day, I would have been stopped out. And so while we didn't catch the whole move, it was a very confident risk reward setup. Blanket. This is going to be the last question of the night. He said, follow-up question, how far back do you go when evaluating for the day? So typically, that's a great question. If this is the scenario, you really only need to look right here because there's no previous historical action at these prices, right? We're currently at all-time highs, basically. So there's nothing you could use. But, I have some drawings here. If this has been a spot that was respected for me, this 60 area, again, this kind of zone right here is of course respected. And again, the higher volume that something is done on, the more it's going to be respected, right? And it gets to a point sometimes where something so far back doesn't necessarily matter. But one area that I'm really looking at is this 5800 area, right? This spot was a major bottom. It's become a big ol' inflection point. It was a key resistance for a long time. And then we used it as support and hosted a few really solid bounces a number of times here, right? And it also tends to line up with this larger support trend that we've respected for the last 2 years, right? If I want to show that here. Again, I don't use trend lines a whole lot, but sometimes they can be helpful because the rest of retail is drawing them and trying to make sense of them. But the biggest thing for me is I think if we are going to make a leg lower here, I'm looking at 5,800. I think this 5,800 area is going to be a really solid entry for longs if we get there.
So Wax, intraday, if we get to that spot, how do you really tell? Obviously, we've seen the support. Like you've got it all drawn out here. But is it just confidence that it's going to bounce at that point is why you want to go long there, or
so you'd want to see
intraday that
you'd want to see one of two things. You'd want to see one of two things. So let's say it gets to the level and it just acts as an immediate floor, and we spend say 10 to 30 minutes just like barcoding on it, right? Like there are buyers at that level who just refuse to let it slip under, right?
Yes.
That would be one sign to try it. The second sign would be, let's say we overshoot it, right? If we overshoot it by say, 10 or 20 points, because it'll likely be on high volume. It'll likely be a big session, right? Just like if we're going to continue selling, we're not just going to start seeing small red days, Typically every time we've sold off, we're not going to see something like this. You only see small red days in the middle of uptrends, right? Big red days are corrective action, right? Look at all these days. These are all big red days, right? The only time you see small red days are in the middle of uptrends, right? Here's a few, here's a couple, right? But the actual sell-offs are decently sized big red days. So the day that we hit it will likely still be a high volume day. So something that I would want to see if you don't see buyers just forming an absolute floor right at the level, which it's not going to be perfect. My actual level here, I believe, is like 92 or something. But 5,800 could be respected just because it's a psych level, right? So again, it's never going to be perfect. But if we're within 5 points of this general area and you see them just putting in a floor, right? Like every time 5,800 is offered, we see a bid, right? That's something that could give confidence because it gives you a really clean stop loss, right? Any break under 5,800 and you're stopped. The next best thing, and I would arguably say is more confident, is let's say we're flushing, right? We go from 50 all the way to 5,800 in a heartbeat, right? We're there in like an hour or two, right? It's just consistent hard selling. I would like to see, an overshot, maybe 10 to 20 points lower. So something like, something like this, right? If we broke maybe, 20 points lower, you see a big old wick, and then intraday it gets saved, right? Off of high volume. You see like just 2 or 3 green candles just rally 20 points back above and save it, right? That would be the exact same thing that we just talked about this morning, right? Or that we just talked about doing this morning, where you see people chasing shorts, they're FOMOing in, and then eventually one change of trend forces all of them to cover losses or reduce their risk, therefore triggering an intraday short squeeze, right?
Yeah.
So that would be even more confident for me if we flushed through it and it ended up just being a wick under on the daily, right? That would be something that is like, okay, I'm grabbing swings for like 2 weeks out, right? And I'm going to ride this thing back up to 5,900 or whatever level you may be targeting.
Okay.
But those are the two types of action that if we're just slowly grinding lower and we just cut right through it and keep grinding lower, if you don't see any respect of the level or a reclaim of the level, don't try the longs. Because price action is king. Price action is decision making. You're watching decision making happening real time. So those are the two scenarios that show me that buyers are present, right? And that's a level that is being respected. Either a floor is built, someone who has a lot more money than me isn't going to let it slip below that price, or we see it immediately reclaimed and we're seeing a lot of shorts get trapped. Okay? So those are the two scenarios that would warrant me to take an aggressive entry like that at that level.
Gotcha. And then for the volume I'm seeing, why does it seem like the most volume we get is always on a red, like, big dip? Like 729, you have that giant red, like, multiple days.
729. 729. Right here. These guys.
Yeah. That green side going back up, it's not nearly as much volume.
Well, this can be explained by VIX, right? VIX is the volatility indicator, right? And typically, when fears are low, people are making less decisions. So if you think that, let's say you're close to retirement, right? Let's say you're 50, 60 years old and you hear, some market breaking news that, everything's going to shit, right? Are you more likely to hold on to your dollar and, tough it out for. Sorry, I got another phone call. Can you guys hear me?
Yeah.
Okay. Are you likely to tough it out for another couple years and hope everything recovers in the next 3 years? Or are you likely to preserve your capital and protect your cash and sell?
Yeah, I'm gonna sell.
Yeah. So when fear is present, it forces people to make decisions, right? And so there's more pressing matters. Whereas, when you're seeing this, right, there's no sense of urgency, right? There might be if you sold right here, there might be a sense of urgency to buy it back, right? To buy back in. But for anyone that's a long-term investor or is a trader, when you're seeing this type of action, there's no sense of urgency. And so premiums decrease. And that is directly reflected with volume, right? All right, guys. I'm going to wrap up the session here. But again, this session was recorded and it will be posted on our YouTube. So if you guys want to review that later, feel free. It should be posted by tomorrow. Okay. All right. Shout out to you guys for showing up, and I hope we have a great rest of the week. Okay.
See you later, Max.
All right. You guys have a good one.
You too.
Later.
Bye.